War Room ICS number 10. Trainee Alan Vergara.
Hola,
Hello, Alan. How are you?
I'm good. How about you?
Doing great. Great. It's another session. It'll be great. We're going to
Yes.
learn, review, and prepare ourselves. Most
Yes.
important. Okay. So I think you saw my notes on the War Room as far as where
Mhm.
we are with the positions we have, correct?
Correct.
Perfect. Yeah. I always want to make sure I offer guidance when it comes to what we do, how things unfold and everything.
Hmm.
Sure everyone understand. That's very important. Sometimes I notice from all these years reading newsletters in the US from the US is that when things don't go as expected, they just don't
Hmm.
offer any guidance. They just go
Yeah.
on silence mode.
Hmm.
And good or bad, money or money, we just have to keep going, keep doing what we do.
Yeah.
At some point, of course, things may not pan out as we expected. We just have to, roll with the punches and see
Yeah.
what we can do. Of course, somehow I think I'm not surprised this whole thing with Doc was going the way it is. Mainly because the stock didn't react as
To
fast as I
the
wanted.
S&P 500.
No, Doku, the OCU, the calls we have
Right.
at Doku, yeah. The
It's
S&P is
reacting
still
to the
holding.
S&P 500.
Yeah, as usual, what we're going to take as a habit is that we're going to review the S&P health as it is
Uh-huh.
before we
Uh-huh.
do everything. Do you see the S&P 500 in front of your screen?
Yes.
Okay, perfect. So on our back-to-back sessions on Saturday, which we're going to have again another back-to-back this Saturday, we discuss the probability, which has it happened yesterday, of the S&P returning to the 3120 level. Do you remember that without watching the?
Yes.
Okay, perfect. It did exactly
Mm-hmm.
what we expected. Did it?
Mm-hmm.
Now, what we want to do is project what can we experience from now, excuse me, to Christmas. So this is how it looks. And I shared this today, probably was today in the morning, and I
Mm-hmm.
mentioned 1.8%, and I did mention trend Fibonacci. This is very important because these are principles that you must apply every time you decide to invest. God forbid something happened to me, but as we progress on your coaching sessions, you do have the tools, and you are noticing, I'm pretty sure, that they do work. I
Yes.
I did nothing extraordinary. I didn't went into a deep analysis of the trajectory of the earnings per share of the S&P 500. All I did, it was a simple 4-hour chart, took my trend Fibonacci from bottom to the high, which I
Mm-hmm.
already had from Saturday with you, working with you,
Mm-hmm.
and I noticed prices were attacking the 61.8% Fibonacci. That was it.
Yeah. Yeah.
All I did. Based on
Mm-hmm.
that, of course, the projection you have to take is from the low to the high, and then you project from 61.8, which indicates that at least in the 4 hours, in the short term, next couple days, I would say by Friday, we should experience 3168.
Mm-hmm.
Again, this is something that you and me already we knew about it. We're working on
Mm-hmm.
it. Now, as you have mastered this, and we're going to have a few practices that I will need you to send me before we do ICS number 11, is as we master the understanding of this strategy, same as price rotation, is where are we as far as what we can expect by Thursday? Because remember, Thursday is one again, a very
Mm-hmm.
important day for us. Also,
Yes.
today, I issued my last recommendation for 2020, my last buy, which is
Snap.
so, yeah, sort of a variation from the Uber one. Still, Uber went
Yeah.
underwater. That's exactly what happens because I see a lot of headlines on that one. So
Yeah, I'm done. I'm underwater in Uber right
yeah,
now.
we are underwater in Uber.
Yeah.
I was thinking, and you always wonder, what if we were have waited a little bit more?
Mm-hmm.
It's difficult to hunt that bottom.
Mm-hmm.
It's always difficult, but we do
Yeah.
our best to get a cheaper price. Now,
Yes.
expecting this 3168, it means that we do have a strong potential that in the event that we don't make a lot of money out of the Doku trades, we may just clear out at break even, and then we can sort of offset. The expectation will be to offset with potentially make some good money out of the Costco trades. That's also on the
Yeah.
table. In the Costco trade, I presume on the second portion, you might be close to 50%, correct?
Yeah.
Yeah. Okay. Perfect. So that puts us a little bit on the money. By the time we get to 60, 65 cents, we'll be at 100% and break even on the first position. 100% on the second tranche that we bought at 30 cents and break even on the first one. So that will be a moment where what I will do, what I suggest to do, learning a little bit of position management, will be to cut the ones that are 100% risk. You remove profits from the table, and then you go into earnings with one single position. That will be the ideal scenario. That's what I will suggest.
Oh, okay.
And that's what I did.
So I can cut 50% of my position right now and cash it out, and then put the rest on the break even.
Are you at 100% on the 30-cent calls that you bought?
Well, the adjusted price right now after I bought the 30 cents is 42 cents.
No, but we need to manage them individually. The adjusted price, because what I can imagine is that the system is adding all together, right?
Yeah,
and giving you the adjusted price. But if you expand the purchase, you will see where is the status of each purchase. So when the 30-cent calls are at 100%, then you can exit.
Okay.
That will be the strategy I will follow.
Okay.
Because I need also one thing I see every time with a lot of these newsletters and so-called trading courses or investment courses is that you don't get to train yourself. They don't get to train you on what to do, how to exit, the structure of exit positions. Because yes, we cost average. Okay, we did that. Now, what's the next step? The next step of all time is for us to reduce our risk while we make money. So that's our goal. Then, as soon as the calls that you bought at 30 cents are at 100%, and you get out because you're making money in that tranche, right? And then while you did that, you collect, you reduce your risk, and of course, hypothetically speaking, if any chance Costco results are negative. That's not what we're expecting. We know that. But if they are negative and the call once again dropped to 30, we might as well at that point just exit everything. And we're not losing money. We protected ourselves. That's smart. That's smart trading and investing. And then we live to fight another day.
Yeah.
That's what we're looking. Okay. The last part that we're looking here at the SP 500 is one more look that I think you will like to see is that we go to the daily chart, and once again we're using the 20 exponential moving average. Okay. Now see how the price bounced right there on the daily chart, right there.
Right, and went back up.
Exactly. The value of the 20 exponential moving average, 31.13. The low for this candle, 31.16. 3 points away from the 20 exponential moving average. This is on the daily. Now, if I take this trend Fibonacci, remember we take trend Fibonacci from the low, the lowest low that we know, to the known high. Put it back. Take a look at that. Do you see that? Where is the price actually stopping? It's no longer the 61.8. Now it's the 38.2% Fibonacci. So I take the expansion from low to high, and I project from that 38.2, and here we go. This is what I think will be the Christmas rally, a surprise for everyone.
Before
the 25th.
Before the 25th or the 20th, because our options expire.
I think by the 19th it will be halfway through. We will be somewhere around 31.80.
Okay.
Yeah.
All right. So we'll still be making money.
my expectation is that we will be making money. This is why this last push on the daily is what makes me think and position myself on Snap. There's nothing spectacular about Snap. It's not a big deal of a company. Snapchat is a company. It's one of those companies that went on an IPO and right now it's trading probably at 50% its original value, which is my like point when I actually decide to go on tech IPOs. If it goes like it happened, because my reflection is always back to what happened with Facebook back in the days. Went out at $40 or something like that, went up like 42, 45, and kaboom, lost 50% of its value. When it lost 50% of its value, then George Soros bought in 500,000 shares. He bought it at 20%, but then of course that 500,000 shares at $20, which is by the way is $1 million, that million went to be almost $10 million. And then he bought a lot more, right? Yeah. Actually, 500,000 shares, that's $10 million. My bad. $10 million went to be what, 120, 160? So what, 5 times his money. So he made $50 million out of a $10 million investment. But he bought at the right time. That's always the most important. So this move price opportunity here is what I'm looking that is going to give us the opportunity for us to get out of Uber, make some money
Costco.
on Snap. Yeah, Costco we will know by Friday.
Okay.
Costco is by Friday. What I'm looking to do, so you know in advance, is that by Friday I will be out of Costco. That's it. I'm not gonna roll too much.
I'll follow your footsteps.
Yeah, I will do. But I have to read a little bit more because this is my expectation. And remember, I have to get you guys. It's like Normandy. We're attacking. We all have to get to the shore. So I have to make sure I bring everyone to the shore. And the shore, of course, means either we break even and we go and make some money. So Costco, the idea will be simple. By Thursday, I mean tomorrow, if we see that it ticks up to 75 cents. Okay, we get out of the calls that we bought at 30 cents, and then we're gonna keep the first entry. And the first entry, we're gonna wait to see 31.80 in the SP500, and then we get out. Let's see, because then market's gonna roll into the high of the positive news because of the Christmas rally. So when we see 31.80, then we cut the last part of Costco. We see where it's Uber, we see where it's Snap, and if everything goes aligned as my expectations, we'll cash out for Christmas.
Okay.
That's the expectation. But everything is based on what you see on your screen. This trend Fibonacci, this opportunity is telling us that this year, the S&P is going to close at an all-time high, what they call ATH, all-time high, and I think everyone will be surprised when we get there. When we get there, I will look into puts again. Once again, our favorite victim will be Netflix. Guarantee
Netflix,
you, Netflix our victim in 2020. Netflix, and we're gonna work on looking for puts. The same way I already sent you a few links for calls, right?
Yep.
Same way I will be sending you victims for puts, because you have to be prepared. Look that I'm not looking. We're not waiting for things to go bad to position ourselves. This is the time for us to start tracking those calls. And yeah, maybe those calls are gonna go in value right now, but rest assured, because those are March, between January and February. If there's a crash here that moves this from 3,200 and it goes back all the way to this level, which this would be our new support, and this, look at the values. And the value that I was expecting way in January and between January and February is for us to retest 3070. And after that, this value here, the 3020. So you have to take your notes and be prepared. As soon as you see the market starts declining by getting to 3,200, you will be watching those calls that I gave you on your Telegram account.
Yes.
Okay. because they're going to start rotating lower. And those
Not
calls,
just the Netflix.
the Netflix, we will find the put. So as the market tanks, it will be easy for us to make money with these puts. Okay. So this is the only thing I'm telling you in advance that we're going to do in January until February.
Okay.
We're going to look for Netflix puts and we're going to trade them.
And the Walmart and Intel.
Those are calls. Those calls.
Okay.
Yeah, those calls, you will be looking to buy those calls when the S&P 500 trades between 30.70 and 30.21 next year.
Oh, okay. So it's after the fact that when the S&P 500 starts trending up again.
Exactly. When it gets to this level is when we can expect the S&P 500 to trend again higher. Not before that. Right now, our focus is in this segment for the Christmas rally. Understood?
And then we target Netflix.
Then we target Netflix for the rotation lower.
Right.
And as market goes lower, we're going to make some money here. I don't know, 100%. It seems that we are getting used to the 100% out of Netflix. But I'm sorry, it's poor Netflix is very helpful. This is what it is, man. But I'm sorry, it's good. But this is with the logic always. When we're going to look for this Netflix put, remember, when we are between 3180 and 3200, okay? I will look for that, and tomorrow morning, you will have the one that I think we have to prepare ourselves. Then, when the market gets here, we're going to look into having these puts, wait, and when the market gets 30.70, 30.21, we sell, we get out of Netflix, and then we prepare Walmart, we have Intel, and we have Merck.
Yes.
And also, we will have Disney.
Yes.
I already have those. So we have to prepare them because those will be going into March. But we will get them sometime in January when this happens, because the market will have to reverse this.
Right.
And and you will never have to worry about, oh, the market is trending and people concerning. You will be like, doesn't matter, because you have all this information. You already know the levels. So you will be prepared. No one is going to surprise you with anything here. Okay? It's pretty simple. So we're into 15 minutes discussing our game plan into January 2020. The last call has been issued, Snap. I'm looking, it was trending between, the low of the day was 5 cents, went back up to 9 cents. So someone made a little bit of money already there. I have my entry at 8 cents. We'll see how that ends up, and we'll see if other members from the war room got in. Now, we have this information. We got it. Perfect. Okay. We're going to go now to our typical. We're going to go and check what Open Insider has to offer us.
Okay.
If anything. Do you have any questions so far?
Not at this time.
Perfect. We're looking at our usual search: CEO, President, COO, CFO, and we're going to add General Counsel, aka the lawyer. And this is what we have. Nothing seems to be of interest here. There's this position in AD Genomic Medicine. The company is tanking. This is 13 cents.
Are you sharing it to me?
Let me share with you 1 second. Apologies. Here we go. Let me know when you see Open Insider.
Okay. Yeah, I see them.
Perfect. We have this small company, GNMX. This company has been trading all the way, trading lower from $2 to the $2, and the company volume, weekly volume, is below 1 million shares. We say no to this one. Then we have a couple of LMMPX. There's only 2 weekly bars here. This is probably an IPO. We skip this one. We have this one. This one, $500,000 into Bigfoot project investment. We have here, there's no chart. I'm not interested. We have 100%. We have the same acquisition, but we have it's nothing here. This is just an IPO.
Not a whole lot,
Yeah, and the weekly volume's way below 500,000. So there's not much to see here. So this is seen on
Yeah.
Open Insider. We're going to conduct the second search. We'll remove everything. We're going to focus on the VP, the director, and the 10% owner. Okay, and I'll remove this. Another search. And we have a few positions. Most of them, they're being repeated of the probably the weekend. Let's see if we can find a few that are interested. Excuse me. And liberated indication, we have a 3% here. And then we have a new position here.
Yeah.
From another director. So let's take a quick look. No chart available. Not interested. That's it. That was it for the champion. Remember Expedia?
Yes.
Okay, we have Expedia here. Look at this guy again. Solid addition.
Is he the same guy?
No.
We forgot already.
No,
it's
this
okay.
is different. This is a different guy. No, this is a different guy. I knew because I remember the the allocation that Samuel did. It was a 98. That
yeah, that one.
Yeah, yeah. So you have this guy allocating. See this director and this vice and chairman of the board. He added a 98. He added a new position at almost $2 million. And now we have the chairman of the board and vice president directly. There's nothing here, adding 34% more shares.
Yes.
Almost $2.5 million. This is very important. Now, what is this? What is the message here? The message here, and we'll quickly look at TradingView, is this: there's solid investment by the insiders into the company. So if the company were to drop to 90, we will be getting a super deal on the Expedia shares.
Yeah.
Now the question is, they want it to get there? Well, of course, as I mentioned before, we have to consider what type of stock is Expedia. Expedia is a Microsoft. No. It's a Walmart? No.
No. It's travel and leisure.
Exactly. Leisure is not your number one concern in life. So
yeah,
it's nice to have, but if there's not there.
But we can afford to lose it.
Exactly. So very important to take notes. February 6, 2020 is the earnings report. Now, what will be also lovely is to keep an eye, and I will put this on our notes, is to keep an eye of what happens on the drop in between January and February. Because on that drop, it could be potentially an opportunity for us to get it cheaper. Now, taking a look at the monthly chart, we're on the monthly chart, okay? I already put in notes for me. If we can say we can get it at $90, at $90 will be a great deal for this stock. We can see now. Do you see the histogram to the right? The blue histogram?
Yeah.
As usual, this is volume profile. The volume profile goes all the way to $120. If we get the Christmas rally, I'm positive that this will make it to this level, 120. But also there's a situation for us to be cautious because we'll have between the 20 exponential moving average on the monthly chart, that will be a resistance right there, $123. And then we have this big position of volume that will be a resistance. So 119, 123, double technical factors to consider that it will be a short-term resistance. Now, what I will add to that is this. You take trend Fibonacci from the previous high now to the low we know. Let me zoom this because I know probably you won't see it clear. But this level here, the 118 is the 50% Fibonacci. And then the 61.8 Fibonacci, it's $124. You see? So it's not a coincidence, that we have the same volume profile with the point of control. And on top of that, we have the 20 exponential moving average indicating that there is a resistance around 123, $119. And then with trend Fibonacci, what do we see? That we have a massive resistance between 50% and 61.8, $118 to $124. This is
Got
not
a
a coincidence.
question.
Go ahead, please.
So when for the use of the trend Fibonacci,
Yes.
when do we go from up to down or from down to up?
In the
So,
direction of the train. In this example, and that's a
uh,
very valid question. Thanks for asking that. That means that you are
uh,
paying attention and you are wondering. What happened is this. If you see what is happening on the monthly price, where is the price heading on Expedia? Up or down?
down.
Okay, great. Now, when the price crossed this moving average, which is a critical moving average on a long-term view,
Uh-huh.
you have a bearish trend. You look for
Okay.
sells. So you need to project from the top to the down, the trend Fibonacci.
Okay.
Now,
Okay.
I will real quick just go to the case that we look at the S&P. Now,
Mm-hmm.
let me show you in the 4-hour chart. In the
The
4-hour
S&P is
chart,
trending up. That's
correct.
why we start from the bottom to the high.
That is correct. There you go. And that's
Yeah.
because, and that's exactly why we took from this low that you can
Yeah.
see this low on your screen to this
Uh-huh.
high, and there you
Yeah.
go.
Yeah.
61.8% because it's going up, down, up.
Mm-hmm. Yeah.
You see? This is
Yeah.
basically, let me show you with a pencil. Look at the price. Price bottom here goes up and then reverse,
Mm-hmm.
then goes up and then
Reverse.
and land. And the
Yes.
question, when it reverses, where is the price landing? It's right here.
At the 61.8%.
Exactly. Exactly. And that's why you
Yeah.
go from down up. Perfect.
Yes. Yes.
Okay, excellent,
thank
excellent. It's good. It's
thank
good
you.
that you. No, you're welcome. It's good that you're asking questions. You're wondering.
Yeah.
Okay, now the reverse scenario is taking place with Expedia right now,
Mm-hmm.
and it's true. It's true. It's true that
Okay. Can you go back to the screen to Expedia?
yes. Oh my way. Thank you. Expedia. Do you see it now?
Yep. Yep.
Okay, perfect. Now we know that the trend Fibonacci goes from the top to the bottom. The price
Mm-hmm.
is trending lower, and it's true. Somehow we can say we missed the opportunity to take that Expedia call all the way up.
Mm-hmm.
Fine, no
Mm-hmm.
worries. We will get to you, Expedia. There are more
Yeah.
opportunities out there. And now
Yeah.
we know that, yeah, it is nice that it's making a rebound, and sure, it will probably go another $8. But the
Mm-hmm.
big money will be when it finds resistance here. It doesn't matter that the insiders bought at $98 and at
Or
$108.
yeah.
They are leading indicators that something is coming. But that something is
Mm-hmm.
coming can face the forces of the market. Okay?
Mm-hmm.
And that
Mm-hmm.
means that if that's the case, I can project, I'm just going to do it with the price range. This is the high to this. We're talking about $50. Look at that, $50. Okay?
Mm-hmm.
And if it bounces between this level, let's say goes to the 61.8 in that case, wouldn't be a bad thing. $50 will take us to, look at that. It can take us all the way down to $74 and a change.
Mm-hmm.
So the real opportunity here, what it is that opportunity? It's actually in the short.
It's to wait. Yeah, to wait for
Exactly.
to short it or to wait until the price goes lower.
Well, Alan, you no longer need to wait for anyone. If it's going
Yeah,
down, you know what you
we
have to
short
do.
it.
And
Yeah,
you're
we
going to
short
short it
it.
how? What are you going to do? How are you going to short it?
How?
How? What are you going to buy to short Expedia?
Puts.
There you go. You know what you have to do now.
Yeah.
No longer you're afraid of what the stock will do. If you have this information, if you have the trend Fibonacci in front of you, if you understand volume profile, if you know
We
where the insiders
yeah.
bought, you know how to
Then we
prepare
gotta
yourself.
mhm.
Go ahead.
We gotta buy put within the 10%.
Exactly. So when I see, we're going to put some alerts. When I see this bouncing of 119, okay, what I will do right away, and let's do it right now. We have time, absolutely. Let's maximize our quotient. 10%. So 120. What is 10% of that?
120 is $12.
So 120 minus 10%.
One um, 1 8. I don't know. 1 8.
1.8, perfect. Yeah, that's simple. That's simple. Don't stress it. 1.8. Okay,
Yeah.
perfect. Now I'm looking at the puts. Okay, there's not too much action here. January will be too close. See that they see the structure of the options offered here. 115. Okay, I'm gonna go to April, and
When we're looking for the 1 8 strike price or close to the 1 8, like either
exactly
1 5 or 1 10.
Perfect, and we have the 1.5. This is one, the April one is trading right now at 5.20. I'm pretty sure I'm gonna click on this one.
It's gonna go down some more.
Oh yeah, as soon as this price goes to 120, this thing will be selling for $1.50. Okay, let's analyze this one. We can always, I'm gonna send it to your Telegram. Okay.
Okay.
There we go.
Where do we get the 120 again?
The 120 based. We go back to the trading here. Here we go. If you see volume profile to the right, the histogram. Okay, that one is around $119 to 120. 26 is the max, really.
Yeah.
But then all the way before that, you have other technical aspects. You have the 123, which is between $118 and $124. That range is right here. I'm going to zoom it so you can see on the screen. Put it back here to the level. Okay. You can see here, 50% Fibonacci, $118, 61.8% Fibonacci, $124. Do you see it?
Yes.
Perfect. So prices can easily surprise us. And remember, in the short term, others know that those insiders are buying, okay?
Yeah.
So they can be attracted to that. But the problem is when you start studying the opportunity, it's only 9%.
Yeah.
It's not a lot.
Yeah.
But retail traders, they're going to buy the bait.
Perfect opportunity for the put.
Yeah. But it's for us, it's the perfect opportunity for the put. That's what it is.
Yeah.
And then we took a look at this. We go back. Let's go back to this one. Okay. So this one, we're going to track it. I'm going to put it right now. We start watching it. You escaped the first time, Expedia, not the second time. 520. Okay. Open interest very low so far, but that will change as soon as the market goes high. Because remember, when the market goes up, then investors, they buy protection. Okay. And when that happens, this open interest will increase. Gonna save it. Have it here. Okay, perfect. Spread in this case so far is 20 cents, not a big deal. Look at the contract low, contract high. We're talking about, let's say, $150, $14 by 150. It's pretty good. We're talking at least that almost 10 times. Okay.
Yeah.
Other things
like
to mention.
9,000%, I think.
Absolutely.
900.
900, yeah, could be 900%. Especially if it drops fast. This is a big win for us. Big win for us, and we will be in position. Now, of course, we know it can drop all the way to let me do one more thing. There is we can always place up here with the date, okay, with the strike price. We know it can drop all the way to 70. So let's say we were thinking maybe 95 before April. Or by April. Let's see, where's that market heading? Huh, no pricing.
None.
Yeah, maybe there's no option there. It's 100. Yes, there's one.
Nothing. There is? Okay.
Yeah. You see? Look at this. The spread is 20 cents only. and
That's
it's
still
already,
huge, though, right?
yeah, it's 20 cents. Not a big deal. Not a big deal.
Not a big deal.
Plus 50 cents, and then start thinking about it. Look at the
Yeah. Okay.
volume. There's some volume. The open interest is more. I think this one is more appealing. And look at, it's already at 364. You
Yeah.
see?
Uh-huh.
Because what happened?
But there's not a lot of open interest, is it? Or
No,
would
not
that be a
yet.
lot?
Not yet. It's
But it's going
685.
to increase.
Yeah, it's going to increase. And remember, it's the other one that we're looking at is $5. Let me pull that up
Yeah.
so we see side by side. Here's Expedia. Look at this. This one is the one that we're considering the 10%. But our expectation is another massive drop that Expedia may suffer, because what they're doing is that they took out the CEO because they are deviating from their strategy. So that means that things
Yes.
are not going that well. It's just a matter of time for the market to realize that in the medium term. Now, this one is 520. Look at it. It's 520, 118, on when we look at the open interest.
Oh, yeah, yeah.
But if I take out the 100, 685,
Yeah.
not too far
Yeah.
to have 1,000 open
Yeah.
interest, and then it's already 364.
Yeah.
You see? So this is the one. This is the champion right here. We found
Yeah.
it.
April. Yep. 100.
And this one, I can see this one easily at $1, making a new low. And we're gonna buy this one. Take your notes. We will buy. Our action is buy the April 17, 2020 100 strike put on Expedia when the Expedia stock is trading at $120.
$120.
That's
Okay.
our call. And that should be sometime from here to New Year's, between January. When is markets reopen on January the 2nd? So that will be on Thursday. In 4 weeks. In 4 weeks. Sometime around that, we should have that high in the market. The stock will be trading at 120. Right now, trading at $112. So 120, this will be our buy-in. And this probably could easily be at $1 or even less than $1. Okay? And that will be our target. Let me just say this. And once again, we're preparing ourselves. Weeks of anticipation. 264. An interest, 635. Excuse me. And saved. And that's it. Once again, another session where we look into what the insiders are doing, because we look at what the insiders are doing. We once again go back to Expedia, EXPE, and then prepare ourselves for the scenario. That's all you have to do, Alan. You have to plan. You have to prepare yourself.
Yes, sir.
Perfect. So we have about a minute 50. Just wrapping up. I will send to you today. You have you will have the number 9 and number 10 together tomorrow. So you have everything.
Okay.
And Saturday we do back to back, and then we keep that continuity. Of course, yesterday was not much happening, so not a big deal. Let's see if we can see. I can see where is Doku right now. Doku is right now at 75, small recovery. We have Costco.
What Costco is right now is at 53, I think, or 55.
53.
I'm not sure.
Yeah. 58. Oh, and the day high was 60. Woo! But yeah, but the only problem is that the spread is like 3 cents, so we have to wait.
Yeah.
That's the spread, so we have to wait. See Snap, if there's anything happening there. Not much. The low was 5, the day high 9, last sale at 8 cents. And last one, we take a look at Uber Technologies.
Uber.
Oh, it's up 10 cents. Woo, 10 cents. No, very nice. Very, very nice. It's holding. It's holding.
Yeah.
It's holding. We're 30 cents down. We gotta wait. Okay, wait a little bit more.
Yeah.
Okay.
Yes.
I want to thank you for for your active participation in your ICS session number 10. We look to come back tomorrow with more. Okay.
Okay. Okay. Thank you, Jose.
Have a good night. Well, in your case, have a good day.
Thank you. Have a good
Thank
day.
you. Talk to you tomorrow.
Okay.
Bye bye.
Bye bye.